So initially we have a 5-wave structure, waves 1, 2, 3, and 4, and 5, followed by a 3-wave correction, A, B, C. Now this 3-wave correction is, this is the perfect 8-wave cycle, 8-wave structure. The 3-wave correction on this slide is called a zigzag. And a zigzag is one of my favorite high probability setups. So I'm just going to talk to you about that for just a moment. You see the A, B, C, and it's very similar on the other side to 1, 2, 3. So whether or not you're an avid wave counter, you can certainly count to 3. 1, 2, 3, or A, B, C. The setup that I'm about to tell you is called the equality setup. So if you see a wave, a move down, a trend move down as in the A, followed by a correction as in the B, you can anticipate another move down in the same magnitude as the first move down. In other words, this is called the equality setup, and you can expect that wave C will travel at least the distance, the number of pips, as that wave A. So that is the point, that if you look for setups which begin with a trend move followed by a correction, you can anticipate the third leg trend move to be the exact same length as the first move. That is the minimum target. You can look for these setups all day long without really understanding how to count the waves. And since the ABC zigzag is a replica of the 1, 2, 3, you can actually get in on a trend move 1, 2, 3 and forget about waves 4 and 5. This is just one high probability setup. But let's talk about the wave personalities. The wave personalities are really important for you to begin to understand the market cycles. And we'll try to add some insight here as best I can. Wave characteristics, the wave personalities, are a direct reflection of human market behavior. And wave personalities exist at every level of the wave count. So we call the start of wave 1 point 0. And when the 5-wave trend move ends, we call that point T for termination. Let's begin with waves 1 and 2. When the move is just beginning, the market is very less emotional because they're thinking that we are still in a downtrend from the previous move down. They have not recognized that we've had a change in trend as of yet. There are no momentum clues yet for a change in the trend. The price action is less emotional. There's little or no volatility, as the traders are still bearish at this point. So market participants are really still in sell mode since no change in trend is evident. So once wave 1 ends and wave 2 begins, because the market is still bearish, traders are selling. So wave 2 movements are usually very sharp and steep, oftentimes correcting most of wave 1. And this is where you see your double bottoms happening. You see at least 61.8% Fibonacci retracements of the wave 2 for the wave 1, and you see your double bottoms. Once you learn how to figure out the end of the trend and you can anticipate the start of the new trend, well, then you are ahead of most of the crowd. And one way to enter early, or one way to enter in this type of scenario where the new trend is beginning, is just to wait for confirmation for the market to take out the top of wave 1. And this is actually called a 1, 2, 3 pattern. It's an end of the trend pattern. where the point 1 is labeled at the beginning of the move, and the point 2 is labeled at the top of wave 1, and the wave 2 corrects down to point 3, and once wave 3 starts and takes out the top of wave 1, that is your 1, 2, 3 reversal pattern kicking in, and you should seriously consider entering. And entering for the duration of that wave 3. Measure the wave 1, project it on the wave 3. We just talked about the equality setup, so why not just capture that bit of profits, the equality with wave 1? And one way of entering is on the 1, 2, 3 reversal pattern when we take out the top of the wave 1. Another way to enter is if the wave 2 corrects most of wave 1, you can certainly buy the wave 2 on its retracement with a small stop below the start of wave 1. Then you're getting in really early. There's a lot more to say about this, obviously, but I want you to think about those two ways of entering the end of a trend. And traders need to understand how to take losses too. So if by chance you do get in at the end of the wave 2 with a stop below the wave 1, as long as you use proper money management, it's possible that it's not the end of the move down yet, and you might get stopped out, but then you look again because you've done the analysis to show that a trend reversal is due, and you don't want to miss it. So that is the personality for wave 1 and wave 2. Now let's talk about wave 3. Wave 3 does give us the greatest profit potential. Robert Prechter calls wave 3 a wonder to behold. One way to recognize a wave 3 is by its steep slope and rocket thrust movement. It almost moves straight up with very, very few corrections in a very steep wave 3. It is generally steeper than wave 1, but not always. And when wave 3 sometimes seems almost vertical, it means that you need to get in. Not at the top, of course, but when it's first starting. And during the wave 3, the economic background begins to support the move, and the fundamentals begin to support the move as well. In the last several weeks in the currency markets, we have had some unbelievable trend moves, huge wave 3 moves to take advantage of the market volatility. Market volatility also increases during wave 3s. And sometimes wave 3s extend. When we are in a strong trend move, you often see an extended wave 3. So the initial target that I talked about, equality with wave 1, that's the minimum target. But the most common wave 3 target is 1.618% times wave 1. An extended wave 3 target could be 2.618 or 4.23%. So we can have a very long extended wave 3 where it's no longer 5 waves, but it is either 9 waves or 13 waves or 17 waves long. That's right, I've added 4 to the 5 to get 9. I've added 4 to the 9 to get 13. I've added 4 to the 13 to get 17. So when you surpass 5 waves in what you think is a 5-wave trend, you've got to say to yourself, here we go, extension in the works, I'm looking for 9 waves. And then when we surpass 9 waves on the move up, that means 1, 2, 3, 4, 5, 6, 7, 8, 9, you have to start thinking 13 is the next target.